Okay, well, I'd like to thank Georgina and the team, firstly for inviting me to moderate a panel, quite an honor, but secondly, for moderating what a panel. I mean, what a lineup we have. And maybe we could start by asking each of you very, very quickly, just a couple of sentences, tell us what you do. We know your titles, but tell us what you actually do. Bayo, if you want to kick off.
Okay, my name is Bayo, and I lead a venture studio in Lagos, Nigeria.
Martin?
I'm currently professor at a small startup university focusing on digitalisation and finance. And what's maybe important that prior to that, I was building in-house fintech tools at the European Stability Mechanism in Luxembourg.
Stephane?
Yes, Stephane Malrait. I work at ING Bank. I'm the head of market structure and innovation for the financial market business. So market structure is working with regulator, policymaker, and industry working group like ICMA, and innovation is working with fintech company like the one in the room today.
Rowan?
I'm Rowan Varrall from the DTI Foundation, registration authority for the ISO Digital Token Identifier standard. I work closely with regulators and the industry alike as this new standard is being adopted across all different types of digital asset markets, whether it be from security tokens and crypto derivative underliers for best practice, or looking more at the regulatory requirements now for stablecoins and the wider cryptocurrency universe. Obviously working very closely with Anna to make sure that ISIN and DTI is working collaboratively in this space.
And Emma?
Hello, everyone. My name is Emma Lovett. I work on the Markets DLT team at JP Morgan. What we're looking to do is to see how we can insert distributed ledger technology into markets products to make them more efficient or indeed find new revenue streams. I think it probably will help if I set the context that prior to this role, which I've been doing for almost 3 years, I was on the fixed income syndicate desk, so the primary bond new issuances desk for almost 20 years at JP Morgan. So a lot of my lens will be sort of on the bond market.
Great. Well, thank you all for being here today. I'm going to ask each of you the same question, and no surprises what that question is. It is, will the new digital world ever fully replace the legacy market? But before we do that, I'm going to ask another question. Do any of you know who Eugene A. Cernan is? Eugene A. Cernan. Does anyone in the room know who Eugene A. Cernan is? Somebody? I want to throw the mic.
Enlighten us, Andy.
Eugene A. Cernan was the most recent person to walk on the moon. Do you know when that was? December 14th, 1972. Now, if we were to go back to the late 60s, early 70s, and I don't know, this was a NASA event, and we were on a panel predicting the future, we would almost certainly be talking about space travel becoming commonplace, living in space. A very revered Princeton physicist called Gerard K. O'Neill in the early 70s predicted that we would have cities, actual cities, 20 miles in diameter, circling in orbit with millions of people, because that was survived back then. It almost seemed inevitable. Now, this isn't designed to throw cold water over the discussion before we start, but I think it's interesting from the perspective of why, when something seems so inevitable, does it not happen? I mean, half a century later, and we haven't really evolved much beyond Elon Musk. So I just want to put that out there. So maybe we can also try and think about some of the challenges that we will need to overcome if we are going to move to a truly digital world. So let's start the debate. The question to all of you, and Bayo, I'm going to start with you.
Wow, okay. I bring a distinctly different lens to this conversation, obviously an emerging markets lens. And what is clear in my mind is that there's a spectrum between legacy and what we call digital, right? And where you fall within that spectrum is very much a function of how embedded digital is in your markets. So for my market, it is very clear to me that there'll be some coexistence, but it's going to be tilted heavily towards digital. And why do I say this? Because there is legacy, but there's not too much of it. And because of that, there's opportunity to adopt digital technology rapidly. The regulatory and policy framework encourages it. And there's just a lot of dynamism. And more importantly, there's a huge youth digital native demographic that is already active in other adjacent markets, crypto, for instance. So Nigeria's got the largest, one of the largest crypto adoption rates in the world, but you don't see that translating into the formal capital markets. And some of the work we're doing is helping transition that demographic into the capital markets to help with the more fundamental things like capital formation and the like. So yes, I think there'll be some coexistence, but where within the continuum we'll be open to some specifics of each market, I think.
That's really interesting. So do you think maybe one of the barriers to transitioning into the digital world is the fact that we have such a vast amount of legacy infrastructure? Do you think it's easier for, shall we say, late developers to advance quicker?
I definitely think so. And I think there's also empirical evidence to back this. Payments, for instance, we've had instant payments in my part of the world. Instant for about 24 years. Instant payments as an instant. It's a relatively...
on mobile phone, right? You had it quite quickly on phone where people were still using the debit card here.
You know, and it's always a shock when I travel to some parts of America and I see people using checks, and I've not used a check in 20 years. And that's the same, and I'm in my late 40s. So for the guys who are below 30, they've probably never seen a checkbook, you know. So I've seen it happen. So it's a very possible thing.
Martin, what's your take?
So my answer is a clear yes. I think in the end, no process will be unchanged. Of course, it's difficult to forecast when and in which direction it will go, but we shouldn't limit our fantasies of what we can imagine by now. Just if we see the recent developments of large language models that have impacted daily business and also private life just in the past, let's say, 24, 30 months, not even years, months, dramatically. At least I wouldn't have imagined this 5 years ago. So I expect more to come and will be surprised in which direction it goes. And in which pace it goes and what the hinders are, demography plays surely a role. More generally, but maybe we come back later to this, there are also different cultural diverse backgrounds that make it easier or more difficult to switch. But we may come back to this a bit later.
Yeah, we should definitely come back to that. But I do just want to pick up on one point. It sounds as if you see AI being a facilitator in this transition.
Yes, I mean, and we've had already a definition of AI. It might be, let's say, just technology. It may be smart technology. The different layers that are applicable to different solutions. But overall, just when we now see how machines are more and more enabled to understand and speak natural language, then this means that such tools can take over tasks that just a few years ago we thought they were typical non-technical tasks. Yeah.
Stephane.
Okay, I will be a bit more provocative here because I cannot predict the future, and if I could, I would be rich by now. But my role is mainly to try to help the organization to prepare for the future and to prepare for what's coming next and how to get there. And what I learned in my innovation journey is like innovation is very hard, and you don't know where you're going to end up, right? You start something, you fail, you try again, you fail, you try again, you fail, until you succeed, and then when you succeed, something big happens. And I think in the digitalization journey, you know, for me there is two types of digitalization. I work for the last 25 years in trying to automate electronic trading activity at different banks. And in fact, I started at JP Morgan to automate the first bond to be traded electronically there. And there was huge resistance. So it was not a technology challenge, it was more a human behavior challenge. And I think we face similar things here in terms of digital transformation, in tokenization of existing assets. We solved all the technical problems in the last few years, and there was many, but we solved them one by one. And now it's more about how do we go to the adoption to change, and it's going to be a generation change, right? So the trader who's been doing the same thing for 20 years is going to resist the creation of bond in digital form. Probably less in your country than it is here, but here there is a natural resistance to change. Nevertheless, I think we're making great progress. I see that, you know, the number of companies, banks, and on the buy side who are looking at it is increasing rapidly. I see the regulator being more engaged. I see the technology company, big and small, being engaged. So I think the world is spreading well, and we are going to make progress. But it's going to be extremely hard to put a date of when it will be mainstream, right? Or maybe it will not, but it will be something else because of the learning we had along the way.
Sorry, Emma, you wanted to...
Yeah, I sort of almost wanted to touch on that, because I think that what we're looking at here is how, you know, we've outlined how on the consumer side, as consumers, we are using digital a lot, and how it really has increased, you know, particularly since COVID. But on the institutional side, we're seeing adoption still being quite slow. And I think that's understandable because obviously on the institutional side, you know, there's always the client and you're looking after the client's money. However, Stephane, to your point about the electronification 20 years ago, I think at that time there was general fear just around technology because it was new to everyone. I think what's quite unusual about the situation we're in now is we are very, very fluent on the consumer side. Yeah, exactly. Yet institutionally, particularly in the middle and back offices, it hasn't really caught up. I think there are a lot of very intelligent front office trading systems that probably don't need much acceleration. But on the middle and back office side, there hasn't really been much modernization. And what's quite interesting, and you know, one of the reasons why I believe that the digital world will replace the legacy market is because I think our future generations will demand it. You know, I think if you were to enter the financial markets today and you were having to, you know, in loans use faxes, it's just a completely foreign behavior to you. Whereas, you know, 20 years ago, faxes were quite common just in everyday life. But now the fact that, you know, you go into the financial markets industry, which you think is going to be quite progressive, but you're asked to use a fax or everything's by email or you're still signing documents with a wet ink signature, I think that's a bit of a juxtaposition to then what happens when you leave work and your entire life is on your phone and it's digital.
That's a really interesting point, and I think we can explore that a little bit more. It might also be a good opportunity to bring Rowan in.
Sure, we really see this as a transition of changes. This is a long process. I think it's just an evolution. Technologies like blockchain, AI, natural process languaging, all these technologies are really being implemented to do what we're doing already today, but in a more efficient way and with more tools at our disposal. In terms of adoption and replacing a legacy system with this new digital asset world, I like to think of this as drawing parallels with the adoption of the internet. Everybody using it is aware of the benefits. In DLT in this regard, a lot of pilots and use cases have shown the longer-term cost reduction and also new revenue-generating activities. Although it still requires a setup cost, it still needs an infrastructure to provide this to the market, to the masses. But again, everybody sees the benefits. Where there are also hesitations on getting into this market, though, a lot of companies, well, just like the internet again, only 70% or so of the global population actually have access to the internet now. So similar to the digital market, some people may not want to or cannot actually access this world. Not all organizations have the innovation labs and the incubators or the technology resources to get involved in this space. Some organizations might not just have the risk tolerance as well to actually jump into this space, or their legacy systems are good enough, they don't have a high enough volume to actually transition and justify setting up into a new ecosystem, which they need to connect and understand more and have the in-house tech resources to actually carry this forward. But I think this is something where a lot of organizations will have to start looking at the opportunities in this space and see if it actually aligns with their long-term objectives. And I think more and more that is going to happen over the next few years. It's not going to happen as a big bang, but we see this as a longer-term transition.
So there's a few other obstacles you threw out there, and one I want to dive straight in on. I just also want to invite you to join in. If anybody has any comments, thoughts, questions, please, I wanted to throw this.
Dun, dun, dun.
So, I want to concur with what Stephane and Emma mentioned about the behavioral challenge. I think it's massive, much more than tech. But there is also one elephant in the room, which I think we haven't mentioned. It was mentioned by Stephen Grady this morning, and it's the vested interest from certain market stakeholders. So, to a certain extent, part of this digitalization adoption or journey, I really think it needs for regulators to step in. Else, there are certain stakeholders that are holding back, maybe due to economic interests, P&L, whatever. Any thoughts on that?
I think that's interesting, and I think that almost echoes what Armin said after their session, which was that, you know, with something like climate change, it was very much driven by regulatory or governing bodies, whereas on this side, there is a lack of clarity, particularly globally. You know, I think that regionally or domestically, some have been pretty advanced, but globally, it's very difficult for all of us to follow, you know, the same process because there's no global clarity.
Yeah, it's true, and which is very strange because in some way I did advocacy with regulator for a few years now, and a lot of time we go in front of the regulator to say, please don't change too much, we have enough on our plate, it costs us a lot of money, try to stop it. But this is one of the areas where we knock on the door of the regulator to say, listen, this is a good technology to be adopted to reduce cost of the whole world system, to engage more people, to be able to trade those instruments. And it will be better for the whole economy. But we need more clarity, and we need you to talk to your peers in the US, to your peers in Asia, to be able to have a global framework. And they are not used to that, right? They say, well, normally you tell us not to do too many things. What do you want us to do?
And also, it's no bad thing, because again, if you take the comparison around what we're doing on the institutional side, which is heavily regulated, versus, you know, what we see on the personal side. I've got young children, and I wish there was more regulation around social media. You know, so I'm definitely not saying that, you know, it's a bad thing. I think, you know, everybody agrees that it can be a force for good.
So, Bayo, I mean, you work with the regulator.
Yeah. Yes, yes, I do in some capacity. Yes.
And how is that relationship?
It's not always been great. What we tend to see is that a lot has to do with the personality of the lead in the regulator. So we've recently had some changes on our side, and the new team is very pro-market, pro-technology, and you can see the speed at which things are happening. It's things that took the former guys like 2 years is taking these guys 1 week, you know. So a lot has to do with just the type of person leading the regulator. That's my experience.
So again, it's a mindset as much as anything. I mean, one of the things that...
Andy, could I add just a slightly different view here in terms of, I think there's been a lot of clear regulation actually coming out in the last 4 or 5 years. If you look back, I think everyone would have agreed that regulatory certainty just wasn't there before. But over the last few years, dozens of jurisdictions have come out with their own digital asset frameworks, adjustments of their laws, or just statements saying that the laws are actually fit for purpose today. They've even gone, steps further with these sandboxes and pilots working directly with the industry. So I think there actually has been a lot of regulatory buy-in to this space, and for that reason, it's allowed us to shift a lot of resources into actually focusing on this longer term. So I think there actually has been a lot of regulatory support and clarity in this space.
Okay, that's an interesting perspective. Martin, you wanted to add?
No.
Or maybe you can respond to this, because clearly regulation does play a role, and it could also be a hindrance, as we've heard, but cost, and it's going back to a point you made earlier, Rowan, that there has to be, you have to look at the costs and then the benefits, right? And maybe they don't stack up.
Yeah, maybe I can start on that, because I got that experience that I think we sold a dream that 10 years ago, maybe when we started the journey on digitalisation, tokenization, to our institution, that it will dramatically reduce the cost. The problem is when you go in front of the CEO, the board, etc., and you say, well, to be able to do that, you are not going to remove anything from your existing infrastructure. You are going to add those new components. And say, where is my saving? You ask me for an extra budget where you promised me 10 years ago that I'm going to save a lot of back office operation costs. So that's the dilemma with that. The cost-benefit analysis in the short term is very hard to do. In the long term, yes, I agree with you. In the long term, we'll get there. But you have to create a new rail completely to get the full benefit. If you only digital parts, just the issuance process, it's not going to save you that much. You have to digitalize the whole stack. And this is costly.
So it sounds as if you almost do want a big bang rather than kind of gradual change.
Yeah, but it's like I use a lot, like as you say, moving from the checkbook to digital payment. A lot of the existing institutions, they still need to be able to process checks. And they still have their system, but they create this new rail to say, to be able to do that, we give you a debit card or phone and you can do your instant payment. But to be able to pay, you need the merchants to have the machine and the connectivity with their bank to receive that payment. So there is no magic wand there. You will need to invest in the future to be able to get the benefit at the end. And I don't think you can do big bang because you are not going to close the existing system anytime soon.
Yeah, and there's a problem with the legacy, right? When we were starting with setting up automated processes at ESM some 10 years ago, we started from scratch, and actually we didn't have enough stuff actually to do the processes manually, so we were basically forced automation because we didn't have any alternative. And so that was then a natural driver of automation and innovation then in that sense. Yeah.
Please, Emma. No, go ahead, please.
I was just going to say, thinking about what you were saying about checkbooks, and things like that. That was also quite regional, wasn't it?
Yeah.
In the sense of, you know, when credit, debit cards, chip and pin, you know, that wasn't done at a global scale to start with. That was all very domestic or regional.
And to Bayo's earlier point, when I'm in the US, I still see checks. I paid a check
You
into
still
a
see
bank
debit
account.
card with a chip on it, right? The chip was a big problem in the US, right? So to have a global, and here that's what you say, it's, to make it work properly, we need global coordination because the benefit will increase dramatically. If you have a difference in regulation in the UK versus Europe, versus Switzerland, versus the US, versus Asia, versus Africa, for organizations like us who are in many different places, it's going to be extremely complicated. So we force we urge the regulator to talk to each other, and I think they do now more and more, and they start to understand the joke. But it took time to get there.
And I think part of that as well, I mean, clearly there's a regulatory framework, there's the digital infrastructure, but going back to something that was raised a couple of times already, there's a cultural and behavioral element to this. It'd be interesting to explore that a little more. Where does the resistance come from?
The unknown, I think it's the unknown of the complexity of the topic. And AI has a similar thing. If you don't understand what it is, you are going to resist that change. You know, if you do a job for 20 years and you're expert on what you do, but you don't understand the difference with this new type of technology, then you don't want to open that door. You are afraid that you are going to look stupid in front of your peers or your management, etc. And that's why education is a big part of it, right? If you bring the organization to be able to understand what benefits they can get for themselves more than the organization, then they will run. They will come with you and run on the journey with you all the way.
And Andy, can I ask a question?
Please.
Perfect. I think all the discussion right now is about legacy replacing legacy. You know, Stephane, what would be your judgment, yeah, if we take a different lens and think about the emerging market, the frontier markets, actually those markets, and can even think about the Middle East, frankly, where you don't really have a capital market. What is the judgment there of what you just described?
Yes, they can, but it's back to the same thing. They need to have the education to know that this new technology exists, to know what the benefits it can bring to them, and to have almost a turnkey solution to be able to say, listen, we come, we install it, you run, right? And then they will take the leap of faith and go on and do it. Since we are still in that journey where we're piloting stuff, I don't think we have the full stack turnkey solution to say, we come to your place, we install it, we create a new exchange and everything. But I think we are getting close to that. So definitely some can take the risk and do it. And emerging markets is a great example, yes.
Do you see a risk actually that they're going to be faster than the developed world which we are sitting in?
Yeah, but I saw that, so I will do an analogy. So I work in FX as well. Long time ago, some of the FX was getting electronic, and I will take some name because it's very old stories, but you know, Barclays and Deutsche Bank were a very small bank in FX, and the big American bank dominates the FX market. And the only way they could penetrate that market was to electronify this market. And they spent a lot of money and technology to make it electronic, to create the first single dealer platform, etc. And within 5 years, Deutsche Bank and Barclays were number 1 and 2 in the FX market globally. So then the other one woke up to say, well, you know, the American one said, we cannot let it happen. You know, and now JP Morgan is number 1 in FX globally in terms of market share, and Barclays and Deutsche Bank had many other issues, and they want down the ranking. But if this happened to some emerging market country, I think it will be a good thing because the other one will wake up by the fear of missing out and say we need to be able to penetrate this market, so we need that rail as well.
Please, Martin.
Yeah, I think, so my expectation is that actually I will make it easier in the future to adapt innovation, because So far, usually to make best use of technology was that we needed to be able to speak the language of machines to do programming. Now, where machines are learning, speaking and understanding natural language, it makes it much easier. You can use your own language, and that makes it accessible for many more people. And so my expectation is that this will also lower the, let's say, cultural hinder, the cultural bar of adopting the technology, because if you can start with your own language, if you can use assistants that help you even write a program or draw a chart just by speaking in natural language what you want to have, that lowers the hurdle.
So,
please. Can I speak to this comment about quicker? I sense that there could be quicker adoption in emerging and frontier markets because my sense is that the convening is easier. Where powerful forces within those markets recognize the benefits, and there are already frameworks that can support the convening and the orchestration of the necessary environments to ease adoption. And in those markets, adoption tends to be enforced, right, mandated, right? So, I mean, it could just be, it's a little less collegiate, if I can put it that way. So, I mean, you just never know, yeah.
Yeah, I think it's a very important point because at the end of the day, it's not too much about the technology, right? We could hide the technology layer from the user. What you want to sell to the user is the simplicity, so back to your point, to say, if you want in your country to give access to people for €1, £1, they can buy this bond, and we'll give them that flexibility. You don't care if it's tokenization on the background. You just give something easy for the user to develop. So you don't tell them there is AI behind it, or there is tokenization behind it, or you just improve the customer journey, make it so easy that for them there's no...
I just want to pick up on one of the other themes that's been mentioned. How important is standardization in all of this? Because we talk about digital, but digital can mean lots of different things, right?
Can I jump in? So, well, very important. But bigger than that, I guess you can see two different levels of standards that would help in this space. Obviously, there are the foundational standards like the ICE and DTI LEIs, currency codes, all these really core components that we all need to use to transfer electronically across the whole lifecycle process. Then there's more standards looking at a different level, like best practices and the same templates. You could think this like the ICMA primary market handbook templates, the secondary market rules and recommendations, the bond data taxonomy, all those where it really makes sense to be speaking the same language and using the same templates when you're in the industry. These are obviously very critical. If your business is interested in interoperability whatsoever with the ecosystem, it makes a lot of sense to be using what the industry has agreed upon. And these standards should really be operable within the traditional system and this new digital world as well. And I think that's the really core component of what we as an industry have to agree upon to actually get to that stage, whether it be a hybrid mode, whether it be a traditional, whether we're going to stay on Earth and not go to the moon in the future. We have to agree to something that will work in this ecosystem that's going to be like this for quite some time.
So if I'm hearing you right, there's a very important role for an industry body to bring everybody together to set standards to make this happen.
Well, because for me there is three levels of standardization. So that's what we talked before about the regulator working together to make sure there is not too much divergence of what you call a digital instrument in one region versus the other. There is, like what you do, the foundation layer of calling the things the same way at the market level. And then there is the industry body group like ICMA, where it's more a market initiative that says it's not imposed by per se by regulation. It's more we need to standardize the terminology of what we mean by one thing versus the other. So we take our own responsibility to standardize the market. And those three layers complement very well each other and are needed to be able to work together.
Okay, so you need a bit of mandatory, but also a bit of buy-in.
Exactly.
Okay. And if there are any other questions, thoughts, observations, I'm going to throw in another question which links in some ways to the previous panel on sustainability. For the digital revolution to happen, it's going to rely on data, right? A lot of data. And data needs storage, and storage consumes energy. Is there an environmental consideration to switching from legacy to digital?
I think an environmental consideration should be there no matter what, whether it's legacy or digital. I'm not necessarily sure it makes that much of a difference. It's just looking at it within the same focus on how does this impact your sustainability footprint? What's the difference?
Any other thoughts?
Yeah, I will agree. It's a fact in a way, right? No matter what, we are going to use a lot more data than we did in the past, and it's going especially. So we have to think about what is the impact of it, but I don't think it's linked to the digitalization at all. But it's a good question.
Yeah, and this can be answered by using renewable energies and, for example, allocating, let's say, calculation power in areas where you have abundance of such renewable energies.
Okay, so that would then mean working in tandem with a climate goal. That's great. Do we have any further questions? We do.
Okay, a big throw.
Armin,
Can you throw it all the
from
way
that?
back there? Come on. Let's try.
Not so much a question, just a comment on sustainability that I think cloud providers such as Google, Amazon, Microsoft, sort of they shield that layer from technology consumers like yourselves, and they can sort of handle that aspect. So if you're moving all your data to the cloud, for example, that sort of takes care of that from a sustainability aspect. But just a comment.
No, that's reassuring. Thank you.
Thanks. My question is just about licensing. I think there's lots of different tools being developed, different kinds of organization, but particularly in the development market context. Whether anyone on the panel has any ideas about opportunities for licensing, from places where things have already been built to places where there's demand.
So licensing, what regard, with regards to what specifically?
Well, I'm just thinking of things, there's various initiatives. So Temenos, the Israeli firm, which is like a modular bank, or in Singapore, the Apex initiative, things like this, where trying to just make it easier for smaller organizations to access markets and, have the technology available to play around with.
The buy versus build kind of, so I think it's a good question, because what we see in the beginning of innovation journey normally is that you want to have kind of the first mover advantage, and that's why some banks start to innovate by themselves and do their pilots internally, etc. Where if you need mass adoption, you need standardization, and you need to be able to, for other players to enter this market to buy solutions. And we are at this flexing point right now, so I see a lot of in this big debate, I see a lot of very large banks starting to partner with fintech companies, a lot more than it was 10 years ago. And I see very small banks starting to develop more in-house of what is specific for them. So I think the working in partnership with tech companies is now something with well established for the very large player, but also the medium side and the small player. And that's why I think it's, you know, if we want to have this turnkey solution for the Middle East, you need potentially a technology partner who can go there and say, we develop that, we can just turnkey solution, and you go for it.
Yeah, I was just going to say I agree with that. And also I think you'll see from the panel that we had on the sandboxes, you know, one of the focuses of a lot of the sandboxes is sort of looking at how fintechs can be involved in those sandboxes, and then, you know, obviously leading to what will come when they expire. So, you know, I think that it is an area that people are taking very seriously, at making sure that, you know, smaller participants can play alongside the larger ones.
Yeah, if I may just add, I think my biggest suggestion will be to solve for markets, because different markets have sort of different emphases. So trying to solve for African or Middle Eastern or Asian markets would require some attention to the nuances of those markets. Yeah.
We're technically over time, but why not? Let's take another question.
So one of the issues that seems to be mentioned on every panel today was data. It's a problem on everything. And so legacy technology just basically exacerbates the data problem. And so one way, obviously, to move towards new technology would be to solve the data problem. So why hasn't there been greater adoption of CDM?
Who wants to take that?
Why hasn't there been greater? Sorry, I didn't catch the last.
Why there is not faster adoption of using fintech company to solve the data problem?
No. What common domain model? So the common domain model's there. It's a standardized data model that could be used. The market could use it. ICMA, ISDA, now Finos are promoting it, but there's still not enough adoption.
Common domain model. I'm not sure how many people on the panel are familiar with common domain model.
Involved in that at the beginning. But it's like every other transformation. The problem is the budget, resources, prioritization, you know, people, vision to change. Where do you get that, right? And that's what I was saying, where we go in front of regulator to say, please don't change regulation, because each time they ask us to change regulation, it goes number one to the priority list in our change budget, right? So in my shop, probably 90% of the technology resources are just focusing on regulatory change. This leaves us only 10% for business change. And business change, you know, you have crisis as well, and the system will break that you have referred. So then you go to 3-4% of what can really be the innovative stuff. And so it's very hard to get that budget and resource allocation.
Well, we are over time. Thank you. It was a good question to end on. And I'm actually going to make a prediction. We've heard everybody else's. My prediction is, in a couple of years' time, everyone's going to be using the common domain model. If you don't know what it is, look it up. You're all going to be using it. Time is up. Please join me in thanking our amazing panelists.